Good morning, everybody. I am 20 seconds early to start the show. There's no comments that can say, oh, he's late. Oh, he's in the bathroom. Oh, he's sleeping. I'm here and I'm up. And I've been up I woke up at 5:45. So I've been up for a while. Got a lot of work done this morning, a bunch of different things. And we're here again for the market open. You know what's really cool about this market open today? It kind of feels like we have a little bit of time before the market open starts. Kind of like when you get to class. Remember when you were younger and you came to class early and you were able to just like chill before class started? Because CPI is in 10 minutes. And so it's not like we immediately have to get into it on. We're getting into the market open. It's like we actually have 10 minutes to just chillax. We're starting 25 minutes earlier. And kind of wait until we get the data and wait till we have to buy the fucking dip. Or wait till the stock market continues to go higher. We'll see. But we have a little bit of time until everything starts. So we can just talk a little bit and chill, which is actually kind of fun, before we just get right into everything going on. So thank you, everybody, for being here. We got 10 minutes until we get CPI. We can just kind of talk and discuss life for the next 9 minutes until CPI comes out. I have a couple stats I want to show you guys, but nothing too crazy. That CPI data is going to be the most important thing. Brent, what's up? Sethi Roth, Top Dasher, Archer, Damien, good afternoon from the UK. Yeah, let's do that. Where are you watching from? Put it in the chat. Where are you watching from? Let's see where everybody is. Nick Piercy, Mark LeBlanc. Where's my coffee? I had my caramel latte this morning. Got to go to Dunkin'. So that was nice. Thomas says the title has me thinking of the line from Tupac, All Eyes on CPI. That's hilarious, too. Adam, dude, I was supposed to text you last night. I didn't get a chance to text you. Also, when you called me the other day, I was in a podcast. So that's why I couldn't pick up your call. I think I forgot to text you about that. But I was going to text you 4 letters, Adam. It's going to be M, S, T, and R's. So now that you're here, I can tell you right now. That's what I was going to text you. M, S, T, and R. Bay Ray, what's up? Doug, Jared, Astricus. I would like 2.9. I would like a Lamborghini. I don't know if both of us are going to get what we both want today. So we'll see. We'll see what happens. Okay, so we got people from South Jersey. That's nice. We got Indiana in the house. Dude, I've never been to Indiana. I want to be. Is Indiana kind of like a Indianapolis is like a city, but it's in the Midwest, right? So it's kind of like Chicago. It's kind of like, what other places are in the Midwest? Dude, what's in the Midwest? It's Indiana, Ohio, Cleveland, Chicago, and is Wisconsin the Midwest? Those are the places I know about from the Midwest. I've never been to Indiana, but I want to go there. I know the Indiana Pacers, but that's it. We got Pierre from Switzerland. Okay, that's amazing. For everyone that's joining, we got a CPI in 8 minutes, so we're just chilling until we get CPI. Victor, South Texas. We got, Adam says from shit York. Is so much shade against New York. What else do we have? Sweden, I love it. Watching from the mountaintop. Johnny boy, what's up? Bangalore, India. Dude, I'm going back to, I forgot to tell you guys this. I'm officially going back to India in October. So I will be doing the market open from India. It's going to be a good 15 days. I have a wedding to go to. I have my family a meeting. I thought we were going to go in the summer, but my mom told me we're going in October. So October is going to be really fun because we're going to be in India doing the market open from India. Hopefully the Wi-Fi is decent. I mean, we're going to my grandparents' spot and they have okay Wi-Fi. So as long as I'll have to do the market open at 7 p.m. every night, which will be closer to 8 a.m. here. So it'll be fun. We got Florida in the house. We'll talk about ARM in a second. Bikini Bottom, I love it. Bristol, UK, Japan, UK. We have so many people from the UK that watch this, that watch the show. I need to do a meetup in the UK. The UK is incredible. I want to see the Brits. I want to eat fish and chips. I want to do all that. I want to do Milwaukee, watching from Mom's basement. Hey, you and me together. Eastern Kentucky, Germany, San Diego, Iowa. What else we have? Richmond, California. I love it. Amazing. All right, so let's go through a couple different stats, and then we got CPI coming out. Obviously, CPI is going to be very important this morning. This is the website for those that want to check it yourself as well. So I'm putting it in the chat. This is the website you want to click on, and that is what you will get. Now, real quick, let me show you the expectations, and then I want to show you a couple of stats I found this morning. Expectations for CPI. This is what we've got going on. All the banks are thinking 3.1. All the banks are thinking 3.1. Pretty much zero banks are thinking that we are going to get 2.9, which is fair. Shelter is the big concern. Energy is kind of a concern with oil prices going up because of the Red Sea. And then also insurance has started to come up as well. Obviously, car prices have gone higher. Tesla with raising prices. The other thing is they actually raised prices for the Model Y yesterday as well. Mortgages have gone up to 7.4% in February. So it's not 7.4, 7.083, and they're up from 6.84 in December. So I look, as much as I think we could get a good CPI, we're most likely going to get a bad CPI. And a bad CPI to me is 3.2 and above, because that's a reacceleration of inflation. 3.1 is okay. It's actually kind of good because, like, in the face of a pretty tough month, we're going to be all right. And then 3 and below is like the market might rally. But more likely than not, dude, we're probably going to see 3.1 or higher, just because it's just math. Like, it's not going to be easy for February to be smaller yet. And so that's the CPI expectations, and it's not going to be the best. It's one of those that we kind of already know what's going to happen. Now, if we get a shock to the downside, this market's going to be excited. Right now in the pre-markets, market's not doing that crazy. S&P, right? Things are up in the pre-markets. S&P is up a little bit as well. Yeah. So markets are kind of expecting that it's probably 3.1 and it's flat and they can continue the rally. Nvidia's up almost 2% in the pre-market. Palantir is up about 1%. Palantir took a nasty fall, 25.35 yesterday. And I know it's so weird when I say nasty because we're talking about Palantir at $25. Like, we weren't stuck at 16 for months. But overall, it did fall from that $27 range. And in general, like, Robinhood lost all their gains yesterday. I mean, they retained some of it, but still was down. CleanSpark, the miners, took a massive hit. So we're going to see today kind of how they react from CPI. But overall in the pre-markets, stocks are at Bitcoin, 71,740. A couple stats on Bitcoin. So you guys know Michael Strategy bought Michael Saylor from MicroStrategy bought 12,000 Bitcoin. If you follow me on Twitter, you will get these updates every single morning. I'm going to put this in the chat. So if you're not following, please make sure to follow. Garcia, what's up? Thank you for being here. So we got BlackRock bought in 562.9 million. Fidelity brought in 215 million. Net inflows were 505 million. Even though Grayscale sold 494. They had 494 million of outflows. So if Grayscale wasn't selling over the past 30 days, we would have close to almost $800 million a day coming into Bitcoin, or coming into these ETFs. And so that's a lot more money. I think as a result of this, BlackRock will probably have to buy close to like 8,000 Bitcoin. Right now, Michael Saylor has 205,000 Bitcoin and BlackRock has 200,000. They're obviously going to surpass MicroStrategy's holdings in the next couple of days. But right now they're going neck and neck, which is kind of crazy to see how that's playing out. TJ, I was going to hit you up this morning. We got to do our podcast this week. Honestly, I'm free today, TJ, if you're free at like at 1 p.m. for options or options pod, especially because I know you're doing some new stuff with Tesla. So we can talk about that. And SoFi. The other thing that TJ I want to talk about is SoFi got, collapsed from that $9 range. I wanted to know what you were doing with your portfolio there. So if you're free today, let's do it. If not, then probably Thursday we could do it as well. Amit, do you own Bitcoin? Not really, dude. I own very little Bitcoin. You guys know what's been doing well for me? I think I told you guys this. These fucking Beto leaps have been not too bad for me. So again, for me, I want leverage on Bitcoin. I don't really care about owning Bitcoin. I just want to make money on it. And like, if you buy Bitcoin at 70,000, like, I don't know what the return looks like, right? But if you buy derivatives. If you buy some derivatives on Bitcoin, you get some broader help. So these are the leaps I have on Bitcoin. They're up about $5,000, up 60%. I should have put more into these. So I started buying these at 287. And that's when Bitcoin was 62,000. I was being very conservative with my buys because I was like, you know what? It's 62,000. I don't know if it's going to go higher. And then the thing just skyrockets. And so my average cost went up to 415. Right now they're 660. The Beto price is 32. For those that don't know Beto, it's basically futures on Bitcoin. It's a strategy ETF that looks at futures on Bitcoin. If Bitcoin goes up, this thing goes up. If Bitcoin goes down, this thing goes down. So I think I have until like 66-ish thousand until this thing goes negative, which is a decent margin of safety. But it could also, just explode as well. So to the upside or the downside. So we'll see. But this is my main, not my main, but this is my sort of core proxy on Bitcoin. And then obviously Robinhood is my other proxy as well. All right, we got a minute until CPI. Let's see what happens. Here's the website right here. This is what we're refreshing to be able to see what we have on CPI. and let's see what we get. I think, do we have it yet? No, we don't have it yet. It's at 8:30, guys. Remember, it's at 8:30. Yeah, it's at 8:30. We don't have it yet. This is still January. Thomas, yes, we got it. CPI is coming out. We got it, Thomas. This is coming out. All right, refreshing. Here we go. The next refresh, we should get the answer very soon. This will be up here. So you see how it says CPI for all items 0.3% in January? We should be able to get it soon for February. All right, what do we got? We're looking for 3.1 so that the economy doesn't collapse. 3.1 so the economy does not collapse. 3.1. 3.1. Still not. Oh, we got it. It is 3.2. 3.2. Okay, that's not horrible. 3.2. That's not horrible. It's not great, but it's not horrible. Consumer price for all urban consumers increased 0.4% in February on a seasonally adjusted basis after rising 0.3% in January, the U.S. Bureau of Labor Statistics reported. Over the past 12 months, the all items index increased 3.2. Real quick, I'm going to look at the markets before we get into this report. Let me look at the markets. How bad is it? So S&P is now green. S&P is still green. Look at that. S&P, so it was up about 0.27%. Now it's up 0.04%. It went red, but now it's green. Robinhood is down. Okay, we expected that, 1678. NVIDIA is still up 1%. It was up 2%. Oracle, they had a great earnings. They're still up 12%. UiPath is up 0.29%. Google is up. Snowflake is now down. Apple's up. Tesla up. Guys, the market's not crashing. Market's handling this pretty well. Look at CleanSpark. CleanSpark's up a little bit. SMCI is up 1.38%. Costco is up 0.22%. Market's handling it. Robinhood is down. Individual equities will definitely be down. S&P is green. Wow. S&P is actually green. IWM is down on this. I mean, it's not good for small caps, obviously, if inflation keeps persisting, but it wasn't that bad. Even SoFi is up 0.26%. Okay, so let's keep reading the report. But this wasn't too bad. This really wasn't horrible. The index for shelter rose in February. We knew that would happen, as did the index for gasoline. Combined, these two indices contributed over 60% of the monthly increase in the index for all items. The energy index rose 2.3% over the past month. All of its components indices increased. The food, which means natural gas, oil, all that stuff. The food index was unchanged in February, as was home. Wow, food didn't go up that much. That's great. The index for all items less food and energy rose 0.4% in February, as it did in January. Indices which increased in February include shelter, airline fares, motor vehicle insurance, apparel, and recreation. The index for personal care and index for household furnishings and occupations were among those that decreased over the month. This is not that bad a report, dude. This is not that bad. Let's get some let's do used cars. What do we have on that? Airline fares rose 3.6%, so airlines are getting more expensive. That's up from 1.4% in January. Let me know in the chat if anyone's taken any flights. Did you kind of feel that, or did you see it was more unusual as well? The index for motor vehicle insurance increased 0.9% over the month. So insurance is up. Among other indices that rose in February were apparel, recreation, and used cars and trucks. Yeah, used cars still are having a little bit of a supply issue. So used cars went up 1.4%. Medical care was unchanged. So medicine costs, physician costs, drug costs are not that much higher. Prescription drugs fell 0.4%. Index for dental services increased 0.4%. Drug index fell 0.1%. This is not that bad, dude. 3.2% over the past 12 months. If you're just joining, 3.2%. That's what we got. Headline, 3.2%. Markets are taking that in pretty okay. Let's look at the markets. This is not shelter and gas went up. That's it. That's what we expected. Shelter and gas went up, and that's it. Shelter and gas, and that's it. Look at the CPI. I mean, the S&P. The S&P is up 0.4. Dude, the S&P is up more than it was up 10 minutes ago. S&P was up 0.27%. Now it's up 0.4. Palantir 1.3. Look at that. Snowflake is up 1%. SoFi up 1.04. Bitcoin 72,000. So Bitcoin was just at 71.7. Now it's at 72. So that's up about 300 points. Tesla's up 1%. Tesla had a good day yesterday as well. Taiwan is up 2.4%. It's not great. Correct. It's not the best inflation report, but I mean, people were expecting 3.3. People were expecting it to be bad. And The banks expected it to be a little bit better, but it's not as bad. Let's get a little update saying, and then we'll keep going from there.
On this, what do you take away after getting numbers that are a little hotter and inflation not slowing the way people had hoped or expected?
Yeah, I expected the February CPI, especially core, to be hotter month over month. We still have some seasonal effects. Gasoline is up. It's interesting to see that food prices hadn't changed because I figured they'd be up a little bit too. I think what we need to see is what happens in super core. And specifically, Steve, thanks for mentioning that owner's equivalent rent was down a little bit. Powell's talk has shifted to a little bit of dovishness lately, but they still have in their back pocket the idea that they're going to be patient. So I think that if employment softens and if we see unemployment tick up to 4.0, 4.1%, and it's the usual suspects coming up disinflation, I think we're up for a rate cut in, say, June, maybe July.
Okay, maybe July, maybe pushing that off a little bit. Skanda, let's talk a little bit more about what this means for Americans who are kind of weighing through how they feel about the inflationary situation right now.
Thanks for having me on again. I think that the data today, obviously for January and February, even last year, we saw upside. But if you take a step back and look at the year-over-year readings, they are continuing to trend down. Maybe for some consensus, not as fast as expected, but still trending down. January and February in the last 3 years have been on the spikier side. And if you look through the details of this print, you see a lot of volatile prices driving up. So I'm talking about used cars, airline fares. These are things that tend to be pretty volatile month to month. I think the Fed has reason to take some heart from the fact that we're finally seeing some progress on owner's equivalent rent. To what Peter said, it seems very reasonable to me as far as the summer being a time when the Fed might consider interest rate reductions. But it's going to ultimately depend on further progress in inflation. But we've kind of gone through the January, February cycle. This is a time when new year, new prices really shows up in the CPI data.
This is kind of a nothing burger to me, guys. I think this is a bit of a nothing burger. We did not see a pretty dramatic increase. It was up. Consensus was 3.1. We got 3.2. Wasn't too bad. Look at SMCI is up 5%. Why is SMCI up 5%? I don't know. At this point, this stupid stock. Remember when I said I should buy the dip at 680? And all of you guys said, no, you're a degenerate. You're a gambler. Well, I would have been up a lot of money if I had done the degenerate gamble. But nonetheless, SMCI up 5%. Now in the S&P 500, CPI couldn't take it down. Look at the S&P. The S&P is up almost 0.75%. And again, when you the index, any index that's big like the S&P going up even 0.5%, 0.3%, that's a big deal. To get something to move like that, you need a crap ton of buy side pressure coming in. People are looking at this data and they're like, actually, this is great. Let's buy it. Robinhood, it's now green, 16.97. Palantir, 1.5. It was at 25.68. Now it's at 25.74. That's green. Tesla, 1 point. Look at Tesla trying to hit 180. It's green. It's green. It's green. So Rivian's up 1.38%. By the way, whoever got the bottom on Rivian 1007, that was a good buy. Rivian at that point was trading at cash, and if you took a risk that look, this is the bottom, and then you got surprised with an R3X car event that came out of nowhere. They kept it on the wraps for a while, and then they surprised people with that event. I mean, you got a pretty nice bump if you got that Rivian bottom. So shout out to anyone who got that. Rivian right now at 1287. QQQ, NASDAQ is up right now. Look at that. Dell is up about 1%. GBTC, that's flat. NEO is up 3%. NEO, I think, had some good news yesterday with deliveries. That one went up as well. Coinbase is up 2.38%. Let's go to the crypto stocks. Crypto stocks are all green. Coinbase is up. CleanSpark's up. Riot's up. Hut 8 is up. Iran is up. Marathon's down a little bit. I don't know what the hell's going on with Marathon. Marathon's a very interesting one. MicroStrategy up another 5.3%. Goodness gracious. Almost $1,600 for MicroStrategy. Just incredible run that MicroStrategy has been having. We'll talk more about MicroStrategy in a little bit. But the market likes it. I did not think this would happen. Dude. I did not think the market would like CPI this much. Look at Tesla. Almost up 1%. And where's the Mag 7? Microsoft green, Meta green, 490, Google 139, Google from 132 to 140, nice little bounce. Amazon 173, Nvidia up 2.29%. They have an event coming up next week for investors called GTX. Tesla up, Apple 173, was at 168 last week. Market likes it. You know, we kind of said this yesterday. We kind of said, like, look, last CPI we got that was hot, which was January CPI. It tanked the market for like literally 5 minutes, and then people bought the dip. It's getting harder and harder. If you are one of those people, even PayPal, dude, that's how you know the CPI is good. PayPal's retaining $60 somehow. If you're one of those people that are really waiting for a price target on a stock and you want like a really good price, this may not be the best market to get it. Like, I was reading some Seeking Alpha articles this morning. I haven't gone on Seeking Alpha in like a couple of weeks. So I just started going through a bunch of different stocks and seeing what people say. And there were just all these bearish articles that like, hey, we're not buying this until it gets to this price, like the PE, this, price of sales. And I'm like, look, I get all of that. But in this market, if you want, like, people were saying Robinhood should be worth $6, dude. People are saying Palantir should be worth like 16. Like, you're not getting that. There's too much demand from invest, and that's something to take into account in the context of like sort of fundamental valuation analysis. Also, what does the sentiment look like? There is very good sentiment around the stock market because people want to place their money somewhere that's better than getting 5%. S&P is almost up 0.75% right now at 0.64 at 514 here in the pre-markets. Market looked at Jerome Powell and spat at his feet with his hawkishness. Yeah, and I think, you know, we kind of saw this coming. That's a good point, because when Jerome Powell testified the other day in Congress, and we were streaming it on the channel, there was nothing really bearish about it. And at some point, the market didn't even react. The market didn't care. And the reason the market didn't care was because it's like, we already know what his stance is. We already know that he's looking for better data. And we already know that eventually the data is going to come. So when the data comes, the data comes. But the data's not here yet. So if the data's not here yet, there's nothing to really react to in terms of what Jerome Powell has to say. So I don't know, dude. It seems like this is just not a market where if you want a really good price on something, you're going to get a really good price. Like, I mean, if you want, you know, at this point, Coinbase at 190, it's like, I don't know if that's happening. If you want Nvidia at 600, I don't know, dude. It's just hard. It's not a stock picker's market in the context of attractive prices. It's kind of an overall rally, and you just got to figure out when to hop in and hold on. IWM almost up 0.6%. That's breaking out. Dude, if this CPI that's hotter than expected couldn't crash the market, what's going to crash the market? Because we definitely know shelter's coming down. We know energy is coming down. We know used car prices are going to come down. Like, we know this thing is going to come. We know deflation is happening. We know China's exporting a shit ton of deflation. There's no way that China's going to be able to artificially inflate prices. Their economy is struggling dramatically. We know unemployment, even though it's going up, people do have jobs. Like, what tanks the market outside of a black swan event or just a natural sell-off, which would be consequentially greeted with a buy the dip? Because if Nvidia sells off to $700, people will buy that dip. If Palantir falls to $22, people will buy that dip. If Robinhood goes back down to 14, I will buy. I would, like, you know, people will add to their positions. They will be, because those dips would seem to be irrational, barring some type of huge macro event that, if CPI is not triggering it, I don't know what triggers it. Now, where's ARM? ARM today, everyone needs to be very cautious of ARM. I know it's at 5% right now. SoftBank officially can dump 90% of their stake today. The lockup period has ended for SoftBank. They are sitting on about $90 billion of gains. This is ARM right now. Let me show you guys this. So they are sitting on $90 billion of gains, and ARM is up 92% in the past 3 months. It's trading at 33 times sales, which is a little expensive for a company that's only growing 18% year over year. One of the most important companies in the world, by the way, but not growing to the point where that valuation, I personally think, is necessarily justified. So there's only 90 million shares outstanding. They can increase that float by a lot if they choose to sell. And why would SoftBank sell? Because they're an investment firm. They would take these gains from ARM and they would put it into something else. And so that is possible today if they choose to do so. So it could be very interesting as the market opens to see how the ARM story plays out as well. Rebecca says, hey, Amit, I'm okay with it. I have several CDs and high yield savings accounts at about 4.6 to 5.1 APY. So the longer the inflation stays where it is, I'm okay with it. Yeah, like, look, the other thing is, one thing that's interesting I was thinking about over the weekend. If you're getting 5% on your cash, Like right now, the cash I have in Robinhood, getting 5%. The cash at Fidelity or all these other places, right? You're getting 5%, 4.6, 4.7. You can't really be upset. Now, you may have a little bit of FOMO that a stock's going up 10% in a week and you're getting 5% in a year. But for taking zero risk, I don't think the broader public is upset that they're getting 5% on their cash. Now, granted, inflation needs to come down because if inflation is at 3%, you're getting 5% on your cash. It's not the best delta. But it's not like people are afraid that they're only getting 5%. Now, in 2020, when you were getting nothing, you had to dump it into the market, right? Because your cash was literally just dying to inflation. So I do think that there is a sentiment there that allows people to keep their money on the sidelines. But the point is, if CPI is not going to crack the market, if hot inflation is not going to crack the market, eventually that money's going to come off the sidelines because people are going to realize there's just not a reason to be scared. Or at least I think institutions, banks, these people are going to realize, hey, maybe we can be a little bit more risk on with our capital, especially if earnings justified. Nvidia right now, look at that. Nvidia is $20 away from 900. Nvidia might try to make a run again at 900. Didn't you say with confidence that ARM IPO buyers would get smoked? Yes, I did. You're right. And by the way, I was right for a little bit because ARM did dip during that first month of the IPO, but then it took off. And look, it wasn't specific to ARM. When I say smoked, like I think the Reddit people could get smoked as well. It's just the nature of an IPO. I mean, like, where's Instacart at? Because ARM and Instacart went public at the same time. Yeah, Instacart's at $34.50. Instacart fell to 20-ish bucks. It IPO'd at 31. Now it's at 34. It's not really the best return after, what is this, like 7 months? But in general, IPOs to me are a little bit scarier than most. And again, ARM was in a tough situation for a little bit, and then I don't think anyone expected 2024 to be the years that semis basically decided to go to the moon. And that's what we had. SMH ETF right now up 1.93%. But if you got into ARM, that's great. Now, the thing that cannot be ignored if you're in ARM is that let's say you have 10,000 shares. There's 90 million shares outstanding. If that 90 million shares turns into 180 million shares because SoftBank dumps 90 million shares, and that would only be like, I think 20% of the outstanding shares that they actually own, you will own less of the company. And unless there is enough demand to buy up those 90 million shares that get dumped immediately, then the stock's going to go down. Like it's not that complicated. The question is there that demand? Maybe there is. But I don't necessarily know if that's the case. And I definitely don't think the growth metrics justify that for ARM. But we'll see. We'll see if that plays out. Wall Street guys are saying to short Reddit. Yeah, I don't know, dude. I think the Wall Street Bets people might actually try to short this thing, but I do think there may be some buyers here ready to protect Reddit. They're going at $31 a share. I don't know, dude. I have no idea how that's going to play out. I think that's a little bit, it's not that pricey, but it can get pricey. If it gets to that $40, $45 level, then you're looking at $8-9 billion valuation versus 6, which I think is kind of reasonable. But we'll see how that one happens. Yeah, ARM plus 5%. Again, I think ARM is one of the most important companies in the world, but their growth is not there, dude. And they have hardware margins. They don't have software margins. ARM's growth is not 18% year over year is not exciting growth for ARM at all. And for how important they're a company they are, I would imagine they were growing at like 30%. They're growing at 15 or 18. But market's buying them up because they're perceived as an NVIDIA play or NVIDIA proxy, which they are. They're one of the best NVIDIA proxies on the market. Do they deserve to be worth 130? Like, I think SMCI's valuation is better than ARM, dude. I mean, SMCI is 60 billion, doing 50 billion in revenue. They're at least growing triple digits year over year. They're also hardware margins like ARM. I don't know. I guess the market's kind of reacting that way in terms of all those semis. Fubo, what is Fubo looking like right now? Fubo's at up 1.24%. Fubo had their earnings weren't necessarily the best. They're suing Disney for that like streaming lawsuit bundle, like cable bundle they're doing with Warner Brothers and other companies. I don't think the lawsuit's going to go that well. I don't know what's so attractive about Fubo other than like retail is into the stock, but I really don't know what's the reason to buy Fubo. Like, are they innovating in TV streaming that much? Is the valuation that attractive? I think their growth is amazing. I did remember looking at that, but outside of that, I don't know what's so exciting about Fubo. Different person says, I'm gonna stay away from Reddit. I hate it too much to trade without emotion. Yeah. I mean, I just don't know how the market's going to overall react or how retail's going to react to it. If Nvidia wanted ARM, then I want ARM. Yeah, look, I don't think that's unreasonable, but Nvidia wanted ARM at 50 billion or 48 billion, and they got blocked from buying it. ARM's at 130, dude. You got to ask yourself, has ARM grown that much to be worth 130 over 40 within like 3 or 4 years? Their numbers don't look like it to me, but I could be wrong, obviously. Okay, what else do we have? What else do we have here? So, okay, so let's go to this right here. IWM is up 0.68%, Snowflake is up 1.04%, and SoFi up 1.3%. Let's get an update on where the cuts look like in the context of CPI. And then we'll keep going from there. For those that are just joining, CPI came in at 3.2%. Let's hear from JP Morgan on what they think around when cuts come in.
It seems very clear to us that the Fed is balancing the risks of over tightening and slipping into recession, but also those risks of easing too soon and potentially, skating us into that scenario where inflation does reaccelerate and we have a bigger problem on our hands.
When you talk about it, it seems really like threading a needle. For us to just assume it's going to be a soft landing does seem like a stretch, doesn't it? They'd have to get it exactly right.
I'm going to let this keep playing, but I just saw On, which is the sneaker brand. They're down 15% in the pre-market, so I'm pulling up their numbers, and then we'll talk about these guys. I believe they're a shoe company, and they're down pretty bad in the pre-market.
I think with the way data has been shaking out, it's not a stretch. And that's why the market has really come around to this.
That's a miracle. First time ever, right?
Well, I mean, you can look back to the 90s and argue that perhaps we had a soft landing there, or even right before the pandemic, if the pandemic never happened, had we maybe gotten that soft landing. But what we're really focused on with our clients, while we have this optimistic outlook on equities, we're trying to remind them not to get complacent and make sure you're preparing for all outcomes, which is why we're still focused on making sure that people have a full duration position just in case things don't go our way and you do need that protection in your portfolio.
All the difficulty that we experience in trying to handicap this, it all depends on whether growth and inflation or a strong economy and inflation are definitely related. And lately we've been saying it's not necessarily a direct linkage. And you could have a decent economy and inflation could slow as pandemic supply constraints. As that finally goes away, you could have both. You don't need necessarily to go to 5% unemployment.
Right.
To have inflation come down. Or now are we back? Now it sounds like when we talk about this, we're talking about growth and inflation being the same thing almost.
Well, look, a couple of years ago, we were in the same camp as many people, thinking that in order to solve this inflation problem, you probably did need to see some of that weakness in the economy, especially the labor market. But instead, and what's caused us to shift our view, is that the labor market tightness, a lot of it's been solved by the fact that you've had this increase in labor supply, driven mostly by foreign-born workers and also women's labor force participation, that's helped release some of that, tension. Combine that with the fact that corporate America is a lot more resilient to this level of interest rates than we initially thought, and the growth picture still looks to be holding up okay.
Which is why I think the market is not tanking. If you're just joining, CPI came in a little hotter than expected, 3.2, and markets are up. Palantir's up 1.5%. Robinhood's up. SoFi is up 1.3. Bitcoin 72,000, and the S&P is up. MicroStrategy now up 4.63%. IWM up 0.52%, SPY up 0.55%. Okay, on. So this is a sneaker brand that reported earnings, and they're not that good. So let's pull this up. Is this a Swiss company, guys? This is a Swiss company. It looks like this is a Swiss company. They did. I just converted this revenue. I think this is 1.9 billion in USD. But they have achieved 46% growth year over year. This is like they sell shoes, growing 21% year over year in the fourth quarter on net sales, about 447 million. Direct to consumer is kind of their core sales channel. Gross profit margin is 60%, which is not bad for sneakers. At least it doesn't seem that bad. Yes, they're a Swiss company. Okay. Based on the successful execution in its multi-channel strategy, On continues to gain market share at unprecedented rates. In 2024, On intends to scale existing and new audiences with large brand movements. Okay, so why are people so excited about this? The growth is there, 50% year-over-year growth, not crazy. 30% quarter-over-quarter growth. They're not profitable, it doesn't look like. Yeah, they only okay, so they're very close to profitability. They're like $8 million away from profitability. So they'll get to profitability. What is this company? On Shoes. On. Okay. So here's the website. You guys can see this, right? Okay. Yeah, let's translate this to English. This is the website. This is the website. So why do people like these shoes so much? These are the shoes. I've never seen these before. These are the shoes. It looks like they are growing in, whoa, $132 for this shit? Well, that's why we know their margins are at 60%. Who's paying $170 for this shit? Dude, what? Cloud Monster, $170? Why are these worth $170? Is it because of like the bottom? Like, is there some technology in these shoes or something? Do they make you jump like Michael Jordan? Like, why are these $170? Wow, you guys are actually loving these shoes in the chat. So you're willing to pay $180 for this? $180. Cloud Tech. I paid $130 for mine. Oh my God, dude. You guys, you know those people that have disposable income that are propping up the economy? Apparently they're all in the chat. I could not pay $130 for sneakers. That's a little too much. This, look at this, $180. Is it that comfortable, dude, to wear this? Is it worth $180? That's a lot of money for sneakers, dude. Unless you're on your feet all day, which then I understand, and I'm obviously not on my feet all day, so I get it. So I'm a little biased here. I mean, they look cool. It's not like they look amazing. They do look cool. Interesting. I wonder if Nike's looking at these guys and is a little like, huh, maybe you guys are encroaching on our territory a little bit. Okay, so the market cap is 10 billion. They did $1 billion in sales. They did $2 billion in sales. So they traded about 5 times revenue. 52-week low, $19. What's the? Let me see what the actual how this stock has done on sneakers. On holding. Okay, so they're down 13%. Let's look at these guys year to date. They're up 9% over the past year. They're up 43%. Past 5 years, they IPO'd at 35. Okay, so they IPO'd during the SPAC era, and so they're not fully recovered yet. Is this like another Celsius? Do you guys think? Is this another Celsius? Is this like another type of company that's just so good with their sneakers, so good with their marketing that's why it's going higher? Could that be something we're seeing right here? I've heard people talk about this on Twitter, but I never really took it seriously for what it looks like. I'm doing a quick YouTube search right here on sneakers. Oh yeah, there's a decent amount of content. Look at that. There's a decent amount of content. For those that are just joining, CPI came in at 3.2. CPI came in at 3.2. Jeremy says I paid $700 for a pair of Jordans. I understand that because Jordans have a brand, right? Jordans, and people that love Jordans will buy Jordans. But Ons, it seems like they're charging $200 because the sneaker itself is so like beautiful or whatever. It's so like it's so comfortable. Whereas Jordans is more so like if you're a fan of Jordan, then you'll pay for that. Interesting. All right, maybe this is a little bit of an Elf Beauty type of marketing campaign where they said in their press release they're teaming up with a lot of influencers to expand the brand. So maybe that's what we have. CPI is 3.2. Again, for those that are joining, CPI is 3.2. Market's barely reacting. I mean, it's reacting to the positive side, so market does not care. Maybe this is a good dip for On, down 14%. I don't really know why it's down. I guess expectations were a little bit too high, but I don't know enough about the company to buy the stock. But seems like everyone in the chat unequivocally says that these shoes are great. Chris says my wife has these. I'm more of an Asics kind of guy. Dude, the type of guy I am. You guys know what I'm about to show you. This right here, called these the Adidas 5000. You know what I'm talking about? These things right here. What is this thing right here? There's like this fucking stuff stuck to it. Like, dude, these are these. Like, these you wear these. Those are them sneakers. Now I wish they made me a little taller, or else I would wear them everywhere. But these are these. Like those slides. It's like the most comfortable thing in the world, dude. It's literally the most comfortable thing. All right, Robinhood's up a little bit. S&P's up a little bit. Not up as it was before. It was at 515-ish. Now it's at 513.5. SoFi up a little bit. Adobe up. Bitcoin at 72,229. Not too bad. But Kukraja 11s, exactly. Exactly. How tall are you, Mitt? 5'7", 5'8" on a good day. 5'8" on a really good day, but if not, I'm 5. Are those the Buffett 5s? These are the Shah Rukh Khan chupples 11s. Shah Rukh Khan 11 chupples. Dude, literally, I've worn flip flops for like the past 3 years. Like, I don't. Now, granted, I don't have like a corporate job, and I don't. But even though one of the clients I had in 2022, that I drove, like you guys know one of those clients, I drove like 120 miles a day, 60 miles up, 60 miles down here in Jersey. They were in North Jersey. I worked for them for a good 4 days a week, for about a year. I wore my slides to work, dude. Like, they were a client, so it's not really to work. They were my client, so I kind of had a decent amount of leverage. I could kind of do whatever I want, right? Because they were paying me as a consultant. But they never really complained about it. Now they did at one point. They said, "Hey, can you not wear the hat?" I still wore the hat because I was like, "Fuck it." I just didn't care. I was like, it reminded me of high school. The janitor would always tell me to take off the hat, or not the janitor, the security guard. And I'd be like, why? He's like, it's disrespectful to wear hats inside like an institution. And I'm like, why? Like, why is it so disrespectful? Like, I never understood that ever. Like, he used to get so upset at it, and I would take it off, and then as soon as he looked away, I would just put it back on. So, but he would get upset. Okay, so that's what we have right here for on the S&P 500. Again, it's up right now. CPI coming in really good. Couple other things I wanted to show. So we talked about Bitcoin doing really well. Again, Bitcoin maintaining the 72,000 level is just incredible. Like, seeing Bitcoin actually stay above 72,000 is really good. For those that are just joining, we talked about the inflows. Fidelity brought in about 400 million yesterday, and BlackRock brought in 562 million. Oh, sorry, Fidelity brought in 250 million. They brought in 480 million on Friday. So inflows yesterday were 505 million. MicroStrategy brought in 812 million of Bitcoin, and they bought 12,000 Bitcoin at an average price of 68,000 Bitcoin as well. So that's what we have. Jay Schwash says, was it a rule or did he just make it up? It was like a made up rule. It was just like, I don't know. I guess school didn't really make it an official rule, but like the security guards didn't like when people wore that stuff. So I don't know. It's just something that they kind of decided on. Let's get an update here on Bitcoin and what's happening with these inflows as well. And then we'll keep going from there. So obviously Bitcoin at 72,000. Why is it retaining these levels? Well, it seems like people continue to pour into these funds. And let's just hear a little bit on why these funds are pulling in more people right now. Let me get to this. And let's go right here. So this is the Bitwise CEO talking about this right now. And then we'll talk more about Reddit, and we'll get some more coverage on Reddit. Here we go.
Merrill Lynch or Morgan Stanley or JP Morgan, do they allow it on their trading platforms?
I think what we're seeing is different parts of the institutional community reacting with different levels of speed. So registered investment advisors, independent FAs could buy it on day one, and they were buying it. Hedge funds could buy it on day one, and they were buying it. As you go up the chain to wirehouses or pensions or endowments, they have their own due diligence processes that takes weeks, months, sometimes quarters, sometimes even years. But I will say that from the day these launched to today, that process has moved faster than I expected. At first, people were saying it could take a year, then it could take half a year, then it could take a quarter, then it was a few months. And we keep getting calls every day. Can we talk today? Can we talk tomorrow? We have to accelerate this thing. So the wirehouses are still coming. Most advisors can't buy it on a solicited basis there, but they're going to turn on, I believe, soon. Eventually, everyone will be able to access these ETFs, and that'll be great for flows. I think it'll mean another uptick for flows in the future.
Simeon, you the only one that's got a short Bitcoin product out there. Those of you who don't know, put up the Simeon short Bitcoin ETF. When Bitcoin hit a new high last week, the short Bitcoin ETF, yours, hit a record in trading volume. That was interesting to me. And both the Bitcoin futures ETF and the short Bitcoin futures have had strong inflows this year. So your business, which is that futures business, isn't it seems only to be strengthened by this.
To quote Mark Twain, the reports of our death have been quite exaggerated. BITO on the long side has prospered, $400 million of inflows this year. And we think it's a testament to the efficacy of the futures approach. Our premium to discount to NAV is de minimis. And there's still a gap there in the spot folks that have launched. So a very important attribute there. Strong flows. And of course, you mentioned the short side. So BITI seeing flows as well. And we're happy to be here. And we think we're serving.
Let's also get an update here from Pomp. This is 3 minutes. He just went on Fox Business. Let's listen to him and then we'll talk about Reddit. Here we go.
All right, so Bitcoin set down to go yet another halving event, probably sometime in the next month. And you got to take a look at this because it rallied like huge after the last one. This, I think, would be the fourth one to bring a Pomp investment investor, Anthony Pompliano. And, you know, this halving thing. Explain to the audience, or let's try to explain to the audience what it is. So we have here the last time it happened. And you can see where Bitcoin was like a 10 grand. Sort of, you know, now we're at 70,000. Seems like it could be a good thing.
Let's go back supply and demand, right? If you have a supply and demand stays constant, but supply gets cut in half, obviously the price has to adjust to accommodate everyone. That's what happened back here in 2020. Bitcoin's trading about $8,000. We got a supply that cut in half, and then obviously price runs. Now, what's interesting is right now, 900 Bitcoin per day are being produced. If you think in kind of gold terms, that's literally gold being dug out of the ground. This is Bitcoin being produced. It's net new Bitcoin coming into supply. But when we hit this halving occur, we're going to go from 900 to 450. Now, what's interesting is right now, there is the equivalent of 9,000 to 10,000 Bitcoin per day in demand. So already we're at 10x more demand than supply. That's this huge price increase that we've seen. So once we go through this halving, if demand stays the same, we may be at 20 to 25x more demand than what the network is producing every single day. And I think that's why people are so bullish on Bitcoin's price.
And the max will be 21 million, right?
There will only ever be 21 million that are out in circulation. That'll take until 2140. Unfortunately, for most of us that are watching or talking right now, we're going to be dead by then. But 90% of the Bitcoin's already out in circulation, and about 70% of that Bitcoin has not moved. So what ends up happening is you have a very illiquid supply, and then you're going to get it more scarce in terms of the daily incoming supply.
That's what they mean when they say diamond hands.
Listen,
that's real diamond hands.
Bitcoiners are teaching traditional finance investors what it means to truly have conviction, to really hold an asset, and to hold through all that volatility. And what I think is really fascinating here is the people who are now buying the ETF, they realize this is a high volatility asset, but it continues to go up over a very long period of time. And so the volatility in the short term forces you to be a long-term holder, and it actually reinforces many of the best financial kind of lessons that we've learned over the decades.
I think the last 11 years, the number one asset, 8 of those. Of course, the 3 it wasn't. It was a worse performing asset, but it's worked out if you held it. Let's talk about these ETFs. So here it is right here. Look at this. So demand is really just, and you called this right here. How much? I mean, does this feed on itself?
So what's really interesting is Larry Fink, kind of the king of Wall Street. He went and he pushed Bitcoin to an all-time high. When BlackRock said, we want a Bitcoin ETF, they're 575 in one. They're now 576 in one in terms of approvals. And so they were able to help do this. They ushered in not only themselves, Fidelity, many others. Now, what's fascinating to me is you're not only seeing net new interest in these ETFs, you're also seeing BlackRock specifically say, wait a second, if we have access to Bitcoin now, maybe we want to put Bitcoin in our other funds, things like their bond funds, or maybe their income funds. And so I think that Bitcoin is now going to become a standard asset that's put in every portfolio. You see Fidelity in Canada saying 1 to 5% in all portfolios. But I think on Wall Street, people are realizing if I put an asset with a 2.1 Sharpe ratio into my portfolio, it's up 70% or so to start the year. That is going to give me a better overall performance. It's going to change the risk return profile of my current portfolio. And that's going to lead to billions of dollars in the short term and likely going to be trillions of dollars over the long run going into this asset. And if you only have 21 million and demand continues to go up, the price has to appreciate.
So 100,000.
Look,
this summer,
3 of the last 4 times that Bitcoin has hit a new all-time high, it has doubled in 18 days or less. And so we're right about, in that range now. Obviously, Bitcoin is starting to push up higher. I don't know how quickly it's going to go up, but I would be shocked if we don't hit 100K over the next 12 months.
Oh, man.
100,000 over the next 4 months or 12 months. That's what Pomp says. I mean, we'll see. Bitcoin right now, it's just kind of crazy to casually look at this thing at 72,000. And really, it's held on to 72. It hasn't gone. It's dipped a little below 72, but the fact that Bitcoin's now kind of making a kind of a statement here at 72,000 is really incredible to see that happening. And that's what we are seeing with greater inflows and obviously greater demand from the likes of different institutions that are buying these ETFs. And so Bitcoin continuing to inch higher. Adobe's up 1.4% in the pre-market, MicroStrategy up 3.42%. Now the markets were a little bit hotter about 10 minutes ago. Now they're cooling off a little bit. They're not red yet. I wouldn't be surprised if they go red. S&P up 0.38%, Robinhood up 0.59%, and Palantir at 25.50, 25.63. So we can see them go red, but they're green even with a hotter than expected CPI, which is seeming to be pretty exciting for the markets to internalize this. And again, if people were looking for a reason for the market to sell off, today would have been one of those reasons, given a hot inflation report. We got a hot inflation report, but it wasn't hot enough. So I'm now asking myself, and all of us, I think, are trying to figure out the question: what is the thing that tanks the market? What is that 10% pullback? 10% pullback in the S&P would be 460 on the SPY. Yeah, about 470, 465-ish. That would be absurd. Not saying it couldn't happen, but it would be absurd because we haven't seen a four handle on that S&P in almost a month now. So to see a four handle, like in a low four handle, 460, that was like October 2023 prices. That would be pretty wild to see that happen. And so that 10% pullback that tends to happen at least once a year. There's a lot of macro indicators saying that might not happen this time, just given the sort of historical anomalies that have happened over the past couple of months. But if it does happen, I think we're all trying to figure out what is the reason for it to happen, and I don't think we fully understand why. That would be the reason for it to happen. Here's a chart right here. These are one of these charts. You'll see this from a lot of accounts that are claiming that the world is ending. This right here, it says the bubble has now surpassed the .com level. The problem here is that if you look at relative PEs, it was at 86 during the .com bubble. It's 35 right now if you compare them for the S&P 500. So it's like, yeah, we might be a little higher than we were in regards to where we were in 2000, but the numbers are kind of justifying why we're higher, which is why the blanket comparison of just being higher to me has not always been the best argument. It's always been a little bit of an argument it's a bit weirder than expected, just because there's different numbers. Things have changed now. London, also a bit of news this morning. London Stock Exchange is accepting applicants for Bitcoin exchange traded notes. Those aren't exactly ETFs, and they're only relegated to like accredited investors, people that are like professionals. So it's not super retail friendly yet, and it's not an ETF. But we are seeing signs across the world that London now is opening up to be able to offer potential Bitcoin ETFs to clients as well. And we're just seeing more and more countries open up and potentially adopt the ability to have access to Bitcoin. Let's get an update on Reddit. So here's Y Combinator president Gary Tan. I think he was one of the original VCs in Reddit. Here's his argument for why Reddit is a good buy for their IPO. Now, just keep in mind, he's going to make a lot of money off the IPO probably. So one thing you want to remember.
Joining us now for an exclusive interview, Y Combinator CEO Gary Tan. Gary, I can't believe it's been a year. It's great to have you back on. And I do want to start with your reflection on those comments that you did make on this show a year ago. We talked so much about the impact that the demise of SVB had on banking, but it also impacted venture debt as well.
Absolutely. I think that's something that's a little bit ongoing that we're still worried about. Ultimately, first, I'm really concerned that an independent bank that was doing incredible work is sort of getting gobbled up by bigger and bigger players. And then secondarily, for the startup venture market, especially for bio, I've heard a lot of basically difficulty with startups that were expecting to be able to have a certain cash flow, a certain plan for their financial future, and really SVB going down put all of that on hold. And we're lucky. Last year we were in a moment where literally thousands of, about 10,000 small businesses possibly couldn't make payroll. We're going to furlough workers. And so we're lucky to sort of escape that. But we're still sort of a year later dealing with the fallout of consolidation. And ultimately, we're really hoping that SVB under First Citizens does actually step up to the plate, builds again the venture debt relationships that support both small business and startup innovation.
So how does that speak to the funding landscape and this moment that we're in right now? And perhaps just as importantly, because to realize funding, you could argue you also need to be able to realize exit strategies. When you do have Reddit, for example, on an IPO roadshow about to become the largest tech IPO that we've had to date, how important is that too?
I think, Reddit is an incredible property. It is just an incredible and very durable company. I can't tell you how often it is that when I want to find out about something going on in the world, whether it's news or a product, I'm literally typing in those keywords into Google, but then typing Reddit right afterwards. So I think having liquidity and, companies going public like Reddit, that's, really a boon for all of tech right now. And I'm really excited for, Steve and the team there.
Obviously, Gary is going to make a lot of money when this thing goes public. So, I mean, look, I get why he's saying it's an important asset. I don't know if it's an asset that necessarily needs to go public, but look, there's nothing stopping them from going public. But just remember, this guy's going to make a lot of money when they do go public.
Gary, the SVB collapse also seemed to dramatically...
Okay, so let's move on from that. That's Gary's thoughts on Reddit. One thing I want to show you guys, so a couple updates. So again, my concluding thoughts on the Reddit IPO, I'm not buying it. I do think it can do very well, just given the meme nature of it. But it's one of those things that I personally would stay away from because you just have no clue what could happen. But in this market where liquidity is vast, yeah, I think IPO will probably be good. But it's taking the risk on it is a little too much for me right now in the context of Reddit. Okay, we got some breaking updates on short floats, and I want you guys to tell me if there's any stocks you would want to know the short float on. So I have the Wall Street Journal, and because of that, I have subscription access to all of the short floats. The two that I wanted to show you before you can put stocks in the chat and then we'll look them up is Palantir and SoFi. So Palantir, the shorts are leaving aggressively. The short float is down another 5.21%. 97 million shares sold short on a 2.1 billion float is just astonishing to me. The fact that basically the entire market has realized we're not touching this thing, we're not going to borrow shares. It's not like they don't have enough shares to borrow. There's 2 billion shares. There's definitely plenty of shares out to be loaned to these short sellers. They're not doing it. There was only 5.24% of the float. Last week, I think it was like 5.8% available or actually being shorted. So to me, it seems like people have recognized Palantir is in a very Goldilocks zone. It's an AI play. It's a company that is growing, especially in key metrics like U.S. commercial. It is executing against their objectives. The CEO is one of the greatest marketers, and I say that in a positive way because he knows how to market and sell the vision for Palantir. It's such a vital thing as a CEO to be able to do. Just take Alex Chriss from PayPal, right? Kind of compare those two Alexes. Alex Karp can do a very good job. And then on top of that, if NVIDIA goes up, people are looking for the next AI play, and that's Palantir. So people are not shorting Palantir. On the contrary, SoFi, although their short float went down yesterday, they're still 17%. So last week, they were 17.86. They went down 2.4%. There's only 990 million shares of SoFi outstanding. 154 million of those are sold short. So that's what you got in the context of SoFi coming down and Palantir coming down, but SoFi still up. Let me know if there's any tickers you want to look at. I see Lunar and MicroStrategy. So let's do Lunar first. I'm curious about Lunar, actually. Where's their short float? Lunar. We got Lunar. 4 million shares. Wow, 34%. Where is Lunar's price? We haven't looked at that in like a couple of days. Lunar is at $5.95. It's still up like 100%, but it was at $12. It was up like 300% 2 weeks ago. So Lunar is 34% short. And then let's look at MSTR. I think this is like 10% short, if I'm not wrong. MSTR, wow, 19% short. MSTR is those shorts must be squeezing a bit because Bitcoin at 72,000, they were short of that. This was as of 2/29. It's March 12th. In the past 2 weeks, MicroStrategy is up about 25%. So that may be contributing to MicroStrategy's shorts or MicroStrategy stock price going up a little bit because that short squeeze might have started to begin. Lucid. All right, let's look at Lucid. We got market open in 12 minutes. For those that are just joining, thank you for being here. The CPI came in at 3.2, hotter than expected, but not as hot to get the market to be upset. Lucid's 30% short. Makes sense. Look at Celsius. Okay, let's do Celsius. I think Celsius is at like 17 or 20, something like that. Celsius 24. So it's up 6%. Okay, so as Celsius went from 50 to basically 90 in the past month, and over the past 2 weeks, obviously earnings were very good for Celsius. They went from 64 to 85. They are now being shorted even more, 6%. 24% of the shorts or of the float is now shorted. Let's look at ARM too. Yeah, let's look at ARM. Let's look at ARM. So the ARM, there's only 90 million shares available. So out of, wow, that's, so it says 0.88%, but I mean, there's a lot more shares eventually coming on. So 9 million shares are sold short and 15% increase. And the reason for that increase probably was because ARM starts to go up a lot more. Okay, last one. Let's do Nubank. Celsius also was 25%. Nubank. This is one I know people are getting more interested in. 2%. Okay, so nothing too crazy. Nubank is 2%. I'm actually curious on Google. How many shorts are there on Google? Google has, wow, look at that. 0.58%. Yeah, if you're a big tech company right now, you're not getting your shares shorted that heavily. Let's do NVIDIA as well. NVIDIA right here. Wow, 1%. People are scared to touch NVIDIA. And that 1% is probably Paul from Everything Money. It's like, that's all of his one. Path. Okay, let's do Path. I didn't see Path. Path has earnings on Wednesday. Path, $4. 4%. So nothing too bad for Path as well. All right, so nothing too crazy for Path, but obviously SoFi still at 17%, and it doesn't seem like it's getting better yet, especially that dilution news. That's definitely not going to get the shorts to go away. But I think when the shorts go away, the stock will finally have some room to breathe. I also have some breaking news right here. Andrew Jeffries, analyst at Truist Financial, he has a buy rating on SoFi, and he put a $14 price target. He put a $14 price target. So there you go. So we do have some more people that are bullish on SoFi. But right now he has $14 on SoFi. That's different from some of the other guys that have a lot lower of a price target. How are they up to date on this? Is as of 2/29. So we get short floats every 2 weeks. So this is as of February 29th. It could have changed obviously since March 12th, but this is the latest data that we have. S&P 0.30%, Palantir 0.83. So again, markets are down a bit, but they're not red. They're down from the initial green that we got right after the CPI data came out, which was about plus 2% across most of the major stocks. Now they're at, 0.1, 0.85, 0.74. SMCI was up 5%. Now it's up 3%. But the thing is they're green, which is really good. Like, in order for them to be green, there had to be more buyers than sellers. And the buyers, the algorithms, they saw that CPI and they started to buy versus sell. So it was a decent report to at least get things started. Could this go red as soon as it opens? Yes. But it doesn't seem like right now it's necessarily headed to go red when the market opens. But that's what we had right there for CPI. Let's get an update on the TikTok ban. Trump yesterday tanked Meta 5% by saying TikTok shouldn't be banned. He's kind of doesn't want Meta to get too powerful. Joe Biden does want to ban it, kind of. So let's see what's happening in that context and why this matters, even if you don't care about TikTok. Two things. Number one, it matters for Meta, Google. I think if you care about those companies and those companies affect a lot of the market, and that matters. Number two, this does influence our relationship with China. If we force TikTok to divest and China says, no, we're just going to leave, we're not going to sell to Walmart or sell to Microsoft or anything, then potentially it might worsen trade relations with China. And Trump started a trade war with China in 2018. If he's elected again and those tensions aren't the best, and then China invades Taiwan, I mean, this could have a lot of different sort of cascading repercussions. And so it'll be interesting to see how this one plays out for TikTok.
Vote on legislation tomorrow that will force ByteDance, the owner of TikTok, to divest or face being banned in the U.S. Joining us right now is Axios business editor Dan Primack. So let's talk about this, Dan. Let's first handicap the chance of this happening, but then assuming that this actually gets enacted, how quickly do you think a sale would happen, and who do you think the real interested parties will be?
On the handicapping, I'd say it's kind of, I'll go 70-30, and not that it won't get through the House. And again, Biden has said he would sign it if it got to his desk. The Senate is the question. And Axios' Ashley Gold, my colleague, reported earlier today, the real lobbying effort is on the Senate. They have they don't love the House language, but my guess is they'll get a combined bill. As for the most interested party, this ultimately doesn't come down to the U.S. government. It comes down to the Chinese government. We can say whatever we want, but if China doesn't allow ByteDance to divest, whether that be through a share sale or a regular sale or even an IPO, then it doesn't happen.
You know, there has been these comments you've seen out of China that somehow they wouldn't allow this to happen. They would just shut it down first. Do you believe that? And what about all of the U.S. investors in ByteDance? Because the value destruction would be real. I'm thinking of General Atlantic being one of the biggest investors in the U.S. in that business.
I think it's possible. You see what China's done with some of its other homegrown tech giants. Think of Alibaba. Think of the Didi situation a couple of years ago, kind of the Uber rival there that was essentially shut down by China briefly. They are willing to play hardball with their local companies. As for the U.S. investors, they kind of have to sit and wait here. I mean, there's not much they can do. This is one of the downsides of investing in a Chinese company, is that there is a lot of government control there. And that's something you kind of have to buy into. But yeah, the value destruction would be massive. TikTok, even though it's not all of ByteDance's business and maybe not even a majority of ByteDance's business, it is its crown jewel, and particularly here in the US.
Dan, can you just walk through the American investors in ByteDance? Because I'm not sure that the public fully understands what that list looks like.
Yeah, I mean, there's a lot. It's kind of a lot of big Silicon Valley firms, although you mentioned General Atlantic, which is based on the East Coast, firms like Sequoia Capital and others. Some of it's a little bit complicated because some firms invested through Chinese affiliates and Chinese subsidiaries. Susquehanna is a big investor. They're the ones who have Jeff Yass, who is their co-founder, the guy who met with Trump a couple weeks ago, and then suddenly Trump flipped, even though he claims it to you yesterday that they didn't discuss the TikTok issue. There are hundreds of millions of dollars invested into ByteDance out of the US, but that represents billions of dollars in value. And for a lot of these venture capital firms and private equity firms, they've been telling their investors, this has been sitting on their books for quite some time. And so if this was to disappear, if TikTok was to get shut down and the value eviscerated, the carrying values of those funds, what they've been telling their investors to expect for years and years and years, would disappear overnight.
You don't think that a number of those firms would band together to both try to buy the company and roll their stakes?
I think they would try. But again, this comes down to, does the Chinese government allow that? ByteDance might want that. The U.S. investors would want that. Absolutely. There's a lot of ways to get this done. And we almost saw that in late 2020 when Trump tried to do something similar via executive order. They almost had a deal in place, but there was always questions. Was the Chinese government going to sign off? And those questions still persist today.
All right, so the TikTok ban, going to be interesting to see how that one plays out. Right now, ARM is down 1.76%, folks. It's falling pretty aggressively right now. The entire market is not necessarily red. There are some individual equities going red, but ARM falling 2% is oddly peculiar. We have 3 minutes until the market opens. ARM was up about 5%. And dare I say, when it popped 5% on CPI, there are some people in Japan that saw that happen and they said, now's the moment. And they pressed the red button and they might have sold some shares. I don't know if that's how it works. I think that is kind of how it works. But basically, they told their brokers to dump it right at that moment. For those that are just joining, ARM can offload a ton of shares. Today, their lockup period is over. You would imagine ARM secures somewhat of a profit. They're up $90 billion. I think they owe it to secure a profit, given some of their other investments like Uber have not, or Uber's worked out kind of, but WeWork, obviously they lost a lot of money on that. They probably need to make some gains, and getting ARM to go public and then getting this thing to go up from $50 on the IPO price, it's worked perfectly. It's worked really well. So either they dump shares and the thing tanks and there's enough dip buyers willing to stabilize the price, or it really dumps and it's just like a free fall, falling knife as it comes lower. We'll see as the market opens, and maybe ARM doesn't take, or maybe SoftBank doesn't take profits today, but today will be one of those days where we'll see. Robinhood's also red in the pre-markets after being up. Robinhood down a 0.12%. SoFi as well is barely up. It was up about 1.7. Now it's at 0.13. S&P is still green. S&P is still green. S&P is not falling yet. But it wouldn't surprise me if things opened up just red and maybe those dips get bought up. It doesn't seem like it's CPI related, just because CPI was fine, but it does seem like people might want to take profits or they're feeling a little scared given what could happen because of CPI. So we will see how that turns out in about 2 minutes when this market officially opens. PayPal, by the way, 2% short float. People were asking. PayPal is not the largest short float out there. PayPal actually surprised me. The past couple of days, it's been retaining 60. If it retains 60 again, right now, okay, it's down to 59.76 after hours or in the pre-markets. Of course, why not? But if PayPal can actually retain 60 and get to 65, then maybe inch up towards 70 in the next couple months, it would be a nice little comeback. And if they crush Q1 earnings, maybe we actually get to $80. Like, that would be really cool to see. We know it's undervalued. We know the buybacks are coming. The question is just if it's going to actually happen. And we'll see. Palantir right now, 25.54. We'll see how that one opens up as the market opens as well. I don't mind the market to drop so I can buy 6,000 more shares of SoFi. Yeah, I mean, look, SoFi is already down a lot from that $9 range because of the dilution news. So we'll see how low can it really go. All right, folks, it is officially 9:30 a.m. Tuesday, March 12th, CPI day. The stock market is now open. Wake your ass up. Here we go. Palantir opens up 25.50, up 0.55%. Nothing too crazy. S&P is up 0.54%. Or 0.43%. So S&P 513. ARM is down 2%. SoFi is down 0.59%. Wow, I didn't think SoFi would actually be down. Big red candle there on SoFi. Lunar's down 2%. PayPal, $60. Getting back to 60. There are buyers that are buying this thing back up to $60. NVIDIA, 881. CPI does not matter if you are an NVIDIA investor, up 2.7%, $20 away from 900. Fubo's up 0.31%. SMCI is up 4.51%, almost at 5%. Instacart, 34.89. That's a 0.9%. Robinhood, 16.88. This touched 17 yesterday, 17.30. Right now, 16.88. Oracle, really good earnings on Oracle. They're up 10%. They beat the RPO, remaining performance obligation expectations investors had, so they did a very good job. $345 billion company. I think it was like 320 yesterday, so I had a $20 billion in market cap. I think that Palantir one day will be at the market cap or above of a Oracle, but it might take a decade to get there. But that's kind of my proxy for Palantir. Google, 139, trying to get back to the 140s from falling at 132. Snowflake, 162. Adobe, 569. Bitcoin, 72.2, still holding strong. MicroStrategy, 1548, up 4.3%. Apple, 173, nice bounce from 168. Tesla goes red. Wow. Tesla goes red. Maybe Tesla's going red because CPI came in hotter, so the Fed's going to have to be higher for longer. And obviously interest rates being higher for longer is not good for a company like Tesla. But Tesla was 182 yesterday, and we thought it was finally, getting through that 170 range, now at 176. Robinhood short float is Robinhood short float, for those that are asking, is what is it? It is 7%. 7%. It's down about 5% from 2 weeks ago, but it's 7% currently. AMD back to 200, Coinbase 259, CleanSpark 1721. They're up 1.72%. The crypto stocks are all green. MicroStrategy's up, Cypher's up, Iron's up, Hut 8 is down slightly, Marathon's up 1%, Ride is up about 1%, and CleanSpark's up 1.89%. One of the reasons why I think the market is afraid of these Bitcoin mining stocks, which is why they've not really gone up since Bitcoin's gone up, even though they're up a lot from the October 2023 lows, is because Bitcoin quite literally has to go much higher because the profits are going to be cut in half for the miners, right? Because they're not going to be able to create as many Bitcoin as before because of the halving event. So if Bitcoin does not go higher, their margins don't get to be maintained. And I think the market might have some concern that what if Bitcoin doesn't get to sort of 100,000, 110,000? What is the margins going to look like on a CleanSpark that cost them about 37,000 to make every single Bitcoin, right? Bitcoin needs to be closer to, 80, 90,000 to be able to keep their profits intact, especially if they only make half of what they're able to make. So that's why I think the market's a little scared of these guys. Obviously, Bitcoin exploding is what keeps them alive, but we'll see if that plays out. Tesla's the only one that's red out of all the Max 7. NVIDIA's up, Amazon's up, Google's up, Meta's up, Microsoft's up, Apple's up. Tesla continues to stay in the red. SoFi 750. Wow. SoFi 750. Just getting hit, dude. Wow. Down 2%. What does the market not like about SoFi, dude? Seems like the market's just like Not a fan. Palantir also 2508. Palantir taking a nice little dip to 24, it looks like. Robin at 1671. Yeah, entire market's taking a bit of a dip. Entire market. It's not just SoFi, actually. It's not just SoFi. I mean, SoFi's down bad, but ARM's down now almost 3%. Palantir down almost 2%. Palantir now below 25. So there you go. Palantir in the $24 range. Nvidia is the only one that's up. SMCI is the only one that's up. Everything else is going down. Robinhood's getting hit. CleanSpark's getting hit. It's so weird, dude. All these Bitcoin proxy plays you thought would do better, they're just getting hit. Celsius is up 1.79%. Celsius is okay. QQQ 439. Fortinet cybersecurity play, that's up. Dell is up. Meta's up, but some of these other companies are just down. Enphase 126 as well. PayPal 59. Wow. SoFi 748. SoFi getting hammered, dude. Give it 15 minutes and we are back up. I do think that we would get a little bit of green after. I mean, look, this dip. Look, if SoFi gets back to the 720, that's where I'd buy again, because that is the price that I think is stupid. Tesla right now is 175. Tesla's down 2%. Tesla is down 2%. Okay, on that company, that sneaker company that everyone in the chat pays $200 for. This one's down 17%. So if you're bullish on these sneakers and their financials, this one might be a good dip buy. I don't know enough about this company yet. Market cap went down about 2 billion. So it went from about 10.1 to 8.89. It's about 1.5 billion that they are down. Where's Rocket Lab? We haven't looked at that one either in a while. Rocket Lab is down 5%. Very interesting market, dude. Look at Palantir, 2480, just getting hammered. Goodness gracious. We might have to buy the dip on Palantir today, guys. You might have to buy the dip on Palantir today. 2480. What the heck is going on? What is happening? I mean, look, it's not that big of a deal. Obviously, we're probably due for a little bit of a pullback. We just had a phenomenal past couple of weeks. And so even Palantir 2480 is still amazing, even though it's like when you see 2750, you're just like, all right, well, 24 is the dip now, even though 24 was kind of reaching when we were at 22 because we thought 22 was the cap on the gains. But NVIDIA's up. It's so funny, dude. The whole market is kind of turning red. NVIDIA and SMCI are up. NVIDIA and SMCI are up while the whole market tends to go a little red. Even Coinbase is red today. Wow. NYCB, New York Community Bank, these guys, they're down about 0.15%. They're down basically 80%. So I think investors are now kind of taking a risk that they're not going to fall anymore. Let's see. Let's see what it looks like. Ross Gerber made some good points in an interview with me, Kevin, about U.S. banks not adjusting their loans properly. I mean, look, the problem with U.S. banks right now, and also the Bank Term Funding Program, BTFP, that's ending, I think, this week. So a lot of these banks, I'm surprised regionals are actually holding up the way they are. KRE is down 1%. I thought KRE would be at like $40. And this is the regional banking ETF. The reason I think regional banks are in a little bit of a tough scenario right now is because if they can't borrow any more money from the Fed, and rates don't go down, they're going to have to report their loans as like material losses soon. And maybe they can avoid it, but especially the ones that have commercial real estate exposure, they're going to have to refinance those loans and they're going to have to show losses until rates come down. And I think they're trying to hold out. TFC, one of the banks that's getting some love, is because they sold $15 billion of their insurance business. So they raised capital to be able to withstand having to take some of those losses. But some of these other regionals are not going to be able to get away with that. And if that's the case, regionals might not be in the best situation right now, even if it's long-term going to be fine. Now, that's actually bullish for Bitcoin. Bitcoin loves when banks collapse. Bitcoin was created in 2008 in response to the great financial crisis. So the entire concept of Bitcoin thrives on the volatility of the traditional infrastructure of particularly American finance. And when that collapses, when there's holes in that system, like interest rates going higher, which means the mark to market on loans, produces billions of dollars of losses, which for Bank of America, they're sitting on about 100 billion in paper losses. That's great for the bull case, for the store of value, and for sort of the underlying thesis behind the concept of an asset that is scarce like Bitcoin. So technically it would be good for Bitcoin, not the best for regional banks, but I don't think there's going to be a massive regional banking crisis. I think it's just going to be a little bit of a hiccup over the next couple of weeks. What does order flow look like on NVIDIA? Okay, let's pull that up. NVIDIA order flow. 594 million came in, 879 million left. And right now it is up 874, up 2%. It's actually surprising, dude. Look at the left-hand side of my screen. Pretty much everything is red. S&P is barely green, and then Nvidia is up 2%. It's like money's rotating out of every stock, and it's going to Nvidia, which is just insane. Like, it's really insane. Admit that isn't really true. The miners control the amount of Bitcoin available to the market. If they don't sell the Bitcoin that they mine, there is no new Bitcoin that become available to the market. That is true. I agree. My argument is just that there's not as much Bitcoin available after the halving event, which technically, so this is the bull case for the miners. Your argument, Troy, is totally correct. The miners control the amount of Bitcoin that get into the market. They keep some of them on their balance sheets, obviously, but the rest they sell into the market. That's how they make their money. The problem is if the miners, if Bitcoin cuts in half, they are technically, having half the amount of revenue. Now, the bull case is if the same demand is there, if not higher, which is what we're seeing from all these ETFs, for a smaller amount of Bitcoin that is mined, which the miners have to sell, the price has to go up, which means the miners, even if they're selling in a smaller amount, they're making so much more margin, or at least the same margin on the Bitcoin that they're selling into the market because there's higher demand, lower supply. So yes, you're right that the Bitcoin miners have to sell it into the market. But if they're selling it into the market with low demand, then they're not getting a good price. But technically, there should be higher demand because there's not that much supply because they're only mining half that they mined that they are able to mine today, which is 900. So it's going to be really interesting to see how that plays out. Bitfarms obviously did a bunch of dilution yesterday. They raised $325 million because they need a lot of electricity to keep this going. They have to acquire a lot of different companies. But it's gotta show that there's got to be enough demand to keep this train running. And if there's not, then it's going to get a little tough to see this play out. Let's hear from Liz Young. We heard her a little bit yesterday. Let's see what she has to say as well. Let's play about 30 seconds or about a minute of what she has to say around this market. She thinks that we need a little bit of a slowdown, which is what Liz Young always thinks. But let's see her reasoning for what's going on in the market.
If we're talking about the momentum trade as the Magnificent Seven of 2023 and the big tech names that brought us into 2024, then yes, I think it already has run out of steam. I think that ship has sailed, right?
Well, what you ready? You're throwing the curtain down on it already. I mean, it was one day for Nvidia, Liz.
I'm not done yet. So the momentum, though, if we're talking about momentum in the sense of risk appetite momentum, I don't think that ship has sailed. I think that's still here. I think that's still alive and well. So all that I think is happening right now, which may be the precursor to something else, but all that I think is happening right now is that investors are saying, I don't want out of the market. I don't want out of growth. In fact, I'd like to try to find growth wherever else I can get it, but I'm not going to be silly enough to go into things that are very obviously crowded trades, very obviously overbought. So let me go try some other things. So there's rotations going on within sectors, which is exactly what's happening in tech right now. And there's also rotations going on amongst sectors.
Do you think the Nvidia reversal on Friday marked a change in a trend for the market? I'm talking not so much momentum behind the rally itself, but the factor of momentum. Stocks that since November 1st, for example, almost anything tied to AI, and especially if you look at the direction of many of these chip stocks, it's not just NVIDIA. I mean, you could Taiwan Semi, AMD, Micro. I mean, so many of these other names just went to the moon, and seemingly everything went with it. That's related to, growth, momentum. Is that going through a reversal?
I do. Well, I think a lot of it hinges on the direction of NVIDIA. Don't underestimate the, rising tide lifts all ships, and then the guilty by association trade as well. So if NVIDIA was the one driving most of this and keeping the enthusiasm up, then yes, for it to give some back, I don't think it should be a surprise that the rest of the chip sector also gave some back. But I also don't think it's a surprise that people didn't throw in the towel entirely on tech. I think that people are still willing to be present for that. And even if we think the market is extended, which I think it's difficult to find anybody who says it's not extended broadly at these PE levels, at this level of yields, even if we think it's extended, that doesn't mean it has to stop. It's just that certain parts of it may need to slow down a bit. And we're in a market, I think we talked about this on Halftime last week, where I remember 2 years ago, maybe even less than that, we were talking about, well, can the market go up without Apple? Yes, it can. Now we're talking about, can the market go up without NVIDIA? We're finding that out right now. So far,
do you think it can?
1 day, 1 or 2 days, right?
Do you think it can?
I do think it can if the rotation trade stays intact. But that also depends on whether or not the economy continues to go, because the rotation trade, in order for a broadening out to be effective and durable, would need to include cyclical sectors, which it has in part, right?
Nope,
Industrials
not in
have
part,
participated.
a lot. I mean, materials are up 7.5% in a
So again, Liz Young is not saying the rally stops, as Hector says right here. She's saying it will slow down and rotate into other sectors, which means that tech kind of slows down. That's kind of her core point. Look, dude, I don't know. Nvidia's now up 1%. Nvidia was up 2%. Entire market's red. Bank term funding program, as Thomas says in the chat, did end yesterday. So that's why we're seeing, maybe we'll see a little bit more impact on the regionals. The thing about Liz Young that is interesting here is her thesis is we are late stage in the cycle, and that means that a recession is coming up. When you look at Nvidia earnings, yes, the gains have been phenomenal, 700% since October 2022, but their earnings don't represent something that's late stage, because we know their numbers are going to continue to crush, which means it seems like the stage is just beginning, at least from a technological AI type of play, which does have an impact on the macro, even if it doesn't have like the impact on the macro that Liz thinks it has. Now, the other problem is we've already had a big market crash in 2022. So when she says late stage of the cycle, to me, it feels like 2023 was just beginning a new cycle, because 2022 was like, I mean, look, when Facebook gets to $88, like it seems like we're in the latest stage of what is a stock market recession, even if it wasn't a Main Street recession. And as a result of that, I don't know. Palantir at 24.65, down 2.7%. Nasty dip today. It seems like we'll be buying a little bit of Palantir. For her to make the argument that it's a late stage of the cycle and that the market has to kind of slow down, maybe she's right that some of the big names definitely have to slow down, like an Nvidia, like an Apple, like a Tesla, even though Tesla slowed down a lot. But it begs the question that if these companies keep putting up numbers, does it really still have to slow down? And can CPI be the thing that gets it to slow down? Because it doesn't seem like that's the case yet. Now, I know the market's red. We'll see what it looks like in the next couple hours. But S&P finally going red right now. S&P was the last one to fall. S&P is green. SMCI now is up 2%. It was up 5%. Robinhood 1628. That's getting hit. TFC getting hit. And NVIDIA is 0.97% away from turning red on the day. It seems like that's the last green one to also go red. Amit, use your buying power to push SoFi up. I don't think I have enough money to push SoFi higher. But yeah, dude, SoFi is just not a stock that's loved right now. We have to accept that. And so if you're buying SoFi, you have to be ready to hold on to that thing. You're not going to get a quick swing out of SoFi. It's going to be tougher as SoFi is stuck in this range. SoFi now down almost 4%. Palantir 24.78. SoundHound down about 1%. Rivian, wow, Rivian's down 5%. Goodness. Unity's down another 4%. Celsius is green. This is so interesting. Costco's green, Celsius is green, and Nvidia's green. Very interesting. Market's kind of giving growth or giving premium to companies that are growing with tangible products versus kind of tech products. Kind of like almost they're tired of betting on tech, at least for today. CRM down about 0.43%. Duolingo up 1.4%. And Google and Apple getting a bounce because they obviously fell a lot over the past couple weeks. Biden, okay, so we'll look at that in a second. Enphase down, wow, 5%. Now, look, Enphase over 120 still to me is pretty shocking given their guidance. So I don't necessarily think they should even be at these levels, but Enphase being up there is very interesting, and they're down 5%. Real Baby Pluto says, you merely adopted the hate. I was born in it. I own PayPal. That's like I saw a Bitcoin meme where someone's like, you merely adopted the volatility. I was born in it. But instead they're like in a meme coin or something. PayPal is probably getting hit down 2%. I bet PayPal is down 1%. Okay. So we got lucky. We're not down 2%. 59.39 here on PayPal. Archer says, I predict that NYCB will go down this week or the next. I disagree. I think NYCB, if it was going to go down, it would have happened last week. I think NYCB is actually, look, I wouldn't buy it. It's hilarious. NYCB is green. I think NYCB is safe. The reason I think that is because they raised $1 billion from a really strong group of investors, and that gave the market a lot of confidence. Remember, they tanked to $1.80, and they were already down 85%. Then they went down 94%, and then they doubled from $1.80 after they were done being halted last Thursday, and now they're up at $3.30. I think they raised enough capital to have liquidity, and they're going to be able to figure this thing out. I mean, they raised $1 billion. Their CET1 ratios are probably going up as well. So I don't think NYCB is in trouble. But if the rates don't get down by like July, then yeah, NYCB is in trouble. It's not going to be the best. Palantir's red. So the thing about Palantir, again, for those that are wondering, you got to remember Palantir is up a lot year to date. It's up almost 45% now at 24.79. We were very privileged to see this bad boy at 27.50. And I know this is why I always say on the green days, the euphoria is great. And I'm excited and everyone's excited. And I'm going on my rants that Wall Street has to buy the shares from us that we bought at $7. And I know that's great. And I love doing it. And it's a great energy. But we also have to be ready for the red days because Wall Street will also sell those shares after they buy them, right? Because they don't care. They're very short-minded. The point is, if you got in early, it really doesn't matter. 24, 27, 26. Eventually, we're looking for 200 on this bad boy. So this is definitely a part of the journey. But this is also why you don't go ape at all-time highs, right? Like you don't buy 30,000 shares at $27, right? If you want to DCA in, you DCA in. That's totally fine. And then you just, because red days happen. They always happen, right? Especially on a stock that's up almost 50%. Like red days are going to come. Now, if you're NVIDIA, those red days are never there, right? If you're NVIDIA, they don't know what red looks like. But Palantir is a mere normal, a mere mortal. So we get a little bit more red on Palantir. Okay, so that's what we had there. What else are we looking at? I mean, given that we're seeing a little bit of bearish undertones to this market, let's hear some analysis on from Yahoo Finance on why we might be getting a little bit of a pullback in the market. Here we go.
S&P 500 and the NASDAQ both recently setting new record highs to kick off the month of March, going into the economic data this week. And then, of course, I guess I'll say it, next earnings season as we're kind of rounding out this first quarter of the year with just a few weeks left.
Thank you so much for having us. Humbled as always. And good morning, Yahoo. I think
that is the first time I ever heard someone say good morning, Yahoo, like that. That was incredible. That's actually great. I'm going to do something like that if I'm ever on Yahoo. That's great. That's amazing.
people are so focused on this term momentum. And if I hear momentum one more time, this is a momentum, market momentum. The thing that we have, I think the most concern about is there's so many people have been late to the party in terms of being bullish, becoming bullish. And whenever the market is chasing, whenever most market participants, meaning portfolio managers or strategists or economists, all of a sudden turn bullish, that has us worried. And then the icing on the cake is, the big bull on the cover of Barron's over the weekend. That typically and historically is not a good sign that everyone is kind of chasing things now. So, given the fact that earnings were good and earnings from our perspective are holding the market where they are actually in terms of where the market is, we do think that prices are a little bit ahead of themselves. People probably are not customary to hear that from us, meaning that we're basically labeled as permabulls all the time. But we really believe that the market could see a bit of a pullback, which would be very normal and very healthy. And then we kind of reset for the end of the year. And we do think we'll see continued new highs the second half of the year.
Brian, it's good to see you. So then what do investors do if they have exposure to the Mag 7? Is it just a wait and see type of scenario, or should they be looking to reduce some of their positions?
Well, we've had, Shauna, nice to see you and hear from you. We have the very good fortune of running portfolios for BMO Wealth Management, both in Canada and the United States. And we've taken some off the table in terms of some of those positions. And we published about this 10 days ago. For instance, we did take a little bit off of NVIDIA just because we've owned the stock for 7 years and the stock's had a heck of a run. And we were a little bit more overweight than we wanted to be. And this is kind of classic portfolio management where you still want to maintain positions, but you want to trim here a little bit. This is in this world of yes, no, right, left, green, red. It doesn't mean sell the stock. It just means trim a little bit. And I think that's the kind of posture that most investors should be from a longer term perspective. To answer your question, I think the tech stocks are kind of the consumer staples now. So use the pullback in Apple to add more. Apple and Microsoft are kind of the consumer staple side of things, where really the growth is going to be from NVIDIA, let's call it, for lack of an AMD. But we do think that Google and Netflix, too, from a communication services standpoint, remain very, very strong in terms of their growth trajectories. But I think the pullback and weakness in Google is a longer-term buying opportunity as well.
I think he's right about that. I know we joke around about Google being woke, but they just have too much cash, dude. Now, I'm not buying it because I don't like what's happening with LLMs and search, and I think we need more clarity there. but it's not like Google's going anywhere. I mean, they just have too much cash. They're going to be able to figure it out. Okay, a couple of updates right now. So I just bought 20 Palantir shares at 24.87, put it in order. That got filled. So bought a bit of the dip right there myself. One thing I wanted to show everybody, where did it go right here? Oh, yeah. So Benny just brought this to my attention in the chat. If you have a Bitcoin miner, this is important to understand. So this news came out like 5 hours ago. Biden resurrects 30% crypto mining tax in new budget proposal. Interesting. The U.S. Department of Treasury documented general explanations of the administration's fiscal year 2025 revenue proposals. By the way, Biden wants to spend $7.8 billion or trillion next year for 2025. He just put out a budget yesterday. The administration highlighted that current laws do not address digital assets apart from broker and cash transaction reporting. Because of this, the administration wants to impose an excise tax levied on goods like fuel on digital asset mining. So the quote is, any firm using computing resources, whether owned by the firm or leased from others, to mine digital assets, that's literally Bitcoin, right, would be subject to an excise tax equal to 30% of the cost of electricity used in digital asset mining. That's not good for the miners. That's a hell of a, yeah, I would imagine that's a reason why the miners are down, or that's at least somewhat of a reason that the miners are down, right? I mean, CleanSpark right now down 2%. To charge you 30% of the electricity cost to mine the Bitcoin. Look, if Bitcoin goes to 200,000, it's probably not going to matter that much. But if Bitcoin's not, much higher, that is a bit of a tax. If implemented, crypto mining companies must report the amount and type of electricity they use. They must report the value of the electricity used if they purchased it externally. Meanwhile, miners who lease computational capacity would be mandated to report the value of the electricity of the company that leased them the capacity. That value would serve as the tax base. They would do a 10% in the first year, 20% in the second year, 30% in the third year. Okay, so next year there would be a 10% tax if this goes through, starting 2025, and then 20 and 30% in the preceding years. I mean, if Bitcoin goes higher, maybe these taxes don't matter long term, but this probably is a reason why the market's feeling a little bit of volatility around the Bitcoin miners. That's weird though. Why are they charging a tax on this? They're making it similar to fuel and oil and taxes on drilling almost when it comes to barrels of oil. And now it seems like they're doing it for digital asset mining. That's kind of the argument the Biden administration is going with here. I don't know. Maybe when Trump becomes president, he gets rid of that because Trump is becoming very friendly with Bitcoin, as we're seeing on CNBC yesterday. He said he likes Bitcoin. He basically talked about how he's created NFTs and sneakers and people are paying in Bitcoin. So he seems kind of friendly towards Bitcoin. I guess we'll see if he's actually going to continue to be friendly on Bitcoin if he gets elected. 30% in 3 years when Bitcoin has tanked could be bad news for a lot of miners. Yeah, I mean, look, if we're at the end of the cycle in 30 years and Bitcoin tanks, that's also not going to be the best. That's also not going to be the best. Biden, Bitcoin miners now 100% voting Republican. Yeah, dude, if you have a lot of money in the miners and you see this shit by Biden, he wants to tax the miners, you're voting for Trump. You are definitely voting for Trump. Okay, ARM right now is barely down. ARM's down 0.51%. It was down almost 4%. Now it's barely down. Nvidia's up 2%. Robinhood 1647 recovering a little bit. Palantir trying to get back to 24.93. And SoFi is now down 3%. It was down about 4.5% a little bit ago. MicroStrategy up 30%. Bitcoin 72,190 currently right now. Thomas says, I don't think we want a huge surge in new energy demand unless that new demand is supplied by clean energy. Well, here's the thing. I don't know why we don't have more nuclear energy or new nuclear energy facilities. I feel like that's a travesty on a global scale that we don't have nuclear energy thriving and infrastructure to support it. But yeah, I agree. Look, if we have a lot of new energy demand, we definitely need cleaner ways to supply that energy. We can't continuously do what we're doing right now. And that's nuclear, clean air, renewables, that would help. But the ironic thing is you need a lot of infrastructure and technology to be able to enable renewable energy to even scale. Like the funny thing about people that are against capitalism, like that leftist group that tried to burn down the Tesla factory the other day because whatever stupid reason they have. First of all, Tesla's done the most for climate change, I think, out of any company. But number two, the irony is for those that hate capitalism, in order to stop the existential threat of climate change, if you believe that it is a sort of fundamental threat to humanity, is to out-innovate. right? Like you need to have renewable energy, clean infrastructure, clean tech, and you need to have billions and billions, and probably trillions of dollars of investment going into that space in order to fuel the ability to eventually replace oil, coal, and things like that. And so you need capitalism to save yourself from what the environmentalists would say is the problem with climate change, which is this need and desire to grow, which is at the root cause a critique of capitalism in and of itself, which I'm sympathetic towards. I get. Like the Vision Pro to me is just late stage capitalism. Like we don't need a fucking Vision Pro. We don't need that. Like we are arbitrarily trying to grow in terms of like Apple's technological innovation because they think they need to increase shareholder profits. But the Vision Pro is a stretch, in my opinion. Like you're just forcing growth. But you do need capitalism in order to stop the bad parts of capitalism, if that's what you believe is the bad part of capitalism, which is this insane desire to grow, which would lead to more climate change. Joshua says, nuclear is a great source of energy. The answer will be a blend of nuclear, solar, and wind, most likely nuclear in the short and medium term. Yeah, I agree. But we got to invest in that and actually allow that to happen more effectively. Sachin says, people have no clue what is the real energy sector is. India uses less than 5% per capita energy than the USA and the West. That is such a good point, dude. That is a great point. Sachin actually worked in energy for a long time. He's worked in consulting in that space. So like, I mean, a country like India is using so much less. Like me, myself, right now, I have this screen open, I have this iPad open, I have this camera, this light, that light. You know, like we've got heat on in the house. Like me as one person living in the West, I'm so privileged with the amount of energy that I'm using. And we are kind of, it's very funny when the environmentalists kind of argue against India and China. It's like, dude, we've got to get our shit together first in the West, and we've got to figure out new ways to have clean energy, or else how are we going to expect other countries across the world to follow suit, especially when they don't have the infrastructure that we have, you know? It's a lot tougher. Sachin says 800 million in the West use more than 40% of the energy and dictate for the rest of the world how to use it. Energy countries with the highest footprint talking about how people should use energy in Africa is ridiculous. I agree. Absolutely agree. We need a lot better infrastructure in the West before we even think of telling all these other developing nations how they should use their energy. Bitcoin right now 72.3, Open Door 294, SoFi 746, Snapchat 1195, S&P 513. Let's hear from Mike Wilson. Mike Wilson, the guy who left JP Morgan, he was their head advisor who pretty much missed the rally in 2023. Here are his thoughts on where the market's going and what type of market this is right now.
I'm not going to mince words. You've been a piñata for people that are like, I want to participate in a market, but I just don't get the exuberance out there. What's the Wilson meter look like right now on market exuberance? And don't narrow it down to the silliness of NVIDIA, but how effervescent, how exuberant is a market I want to be in, but I'm scared stiff?
Yeah, I mean, look, there's been some big winners and some big losers. It's been a stock picking environment, quite frankly, really for the last year and a half. And look, we had that major low that was made in October 22, one that we identified as a good opportunity. The one last fall we felt was close, but didn't quite get there. But of course, we had a huge rally. And what's happened, Tom, and I think this is a differentiating feature of our view versus others, is we view the last 4 to 5 month rally as being driven more by very loose financial conditions, extreme liquidity, which is finding its way into the right parts of the market. And the parts of the market that are working are what we call high quality growth stocks. And some of those you've mentioned, and some of those are, but it's not just tech stocks. Some of the industrial space, which are benefiting from some of those heavy handed government programs, for example. Some of the consumer space is having a bounce back, particularly consumer services. And then of course, these companies that are being efficient. And that's really what's been working. And it's been, so in other words, the market's been very good at identifying the winners. It's also been very good at identifying the losers.
Well, Mike, I mean, you mentioned efficiency and you mentioned operational efficiency. And for me, I need you to drill down a little bit more. What indicators are you looking for? Are we strictly talking operating margins here? I mean, how do you evaluate, those sectors you're referring to? Like which sectors are primed to perform well, given, that focus on high quality growth, on operational efficiency, on the narrowing of that big divide between the haves and have-nots?
Yeah, it's not really by sector, Damien. It's more by company. It's really company specific. And we've talked about that, meaning within sectors, there are companies that are being more efficient than their competitors. And we're seeing that. So that once again, it is, as you say, the haves and have-nots. So I don't think I don't think it's a sector call. It's a company call. It's a very stock specific call. So that's actually a really good environment for active managers who can take advantage of that.
So
and we're
the-
seeing, like I said, we're seeing it across multiple industries. It's not just one or two.
So then, Mike, is the key identifying those companies that are going to improve their operational efficiency, or selecting those companies that have an advantage over their peers?
It's both. And one of those advantages is just sheer size. Having
So Mike Wilson thinks it's a stock picker's market. Mike Wilson thinks, and again, Mike Wilson was a big bear in 2023. Obviously got it wrong. And that's why he I don't know if that's the reason why he left, but he kind of left his JP Morgan job after 20 years in 2024. That was tough because a lot of people listen to Mike Wilson. The guy you just heard, a lot of people listen to him. I mean, he's like, his opinion dictates, I would argue, tens of billions, if not hundreds of billions of dollars of institutional capital that is taking it as his advice. And in 2023, Coinbase right now 254, he said the market was going to collapse. The market did not collapse. The market had one of the best rallies we've seen since what, 2020, since COVID. So, now he's kind of on the bullish train. He's like, you know what? He basically said I was wrong and that it's a stock picker's market, but his argument is just to kind of be very selective with the stocks you're looking at, particularly for operational efficiency. That's what you're looking for. And AI actually increasing margins, not just saying it's going to increase margins. DraftKings right now is at 41. They're a little green. Palantir 2503. So Palantir getting up above that $25 level. Enphase 122. Nvidia still up 2%. Nvidia not falling off, even though the broader market is selling off a bit. Tesla, wow. Tesla 172. Tesla 172. Incredible, dude. Tesla, you thought yesterday the 182, I guess, was a fake out. They got some people to buy it at 182 and fell down now to 173 range. Bitcoin trying to make a run at 73. Bitcoin getting some green candles there, 72.6. Let's see if it can get to that 73 range. That would be a new all-time high if we could crack 73. And again, BlackRock bought about 550 million, and Fidelity brought 200 million yesterday of Bitcoin. So let's see. Maybe we are ready to get into that 73 range, and then keep going from there. Look at that, 72.7. We'll keep an eye on it. $300 away. Let's see if 73 could happen. Sachin says Tesla downward trend is not broken, so there's further downside ahead, in my opinion. I agree. I've seen some technical analysis on Tesla, and I don't fully understand it as much as the biggest technical guys, but there is a downward trend on that stock. And in order for that to revert, which is why the bump to 210 or 205 was very weird to me, because it's not like the downward trend had broken. It's just like there was a little bit of a different narrative coming out a couple weeks ago. And everyone thought they missed the dip at 180. So I think people FOMO'd in. And then, that downward trend continued to persist. And now we're here at that 172 range. I think a lot of people are not going to get really excited about Tesla until we get to the 165-ish range. And really 150 is when people, I think, start loading in a lot of money, but 165 is what everyone thinks is going to happen. And the reason for that, we're $3 away from the 160s, is because Q1, we know the volume is going to suck. We know the margins are going to suck. They had to just cut so many prices in China. China's 25% of the revenue, and the Germany factory has been shut down for a broader month. So we know Q1's not going to be good, and Elon's not going to be excited on the call, dude. Elon's tweeting about politics all day, and God bless him, he can tweet about whatever he wants, but it doesn't seem like he is going to stop being as political. And he's definitely not tweeting about Tesla all day, right? He's just continuing to be him. And investors, whether you like it or not, they're not a fan of it. So that, I think we all know Q1's not going to go good for Tesla. And on top of that, interest rates aren't coming down. Not anytime soon. Oh, Bitcoin trying to get to 73. Bitcoin, it looks like it's going to happen right here. Look at that. We're about $100 away. Oh, we did touch 73. We touched 73 at 105. Look at that. There you go. 73 on Bitcoin, new all-time high. And so as a result, it does seem like Tesla is probably going to be under a little bit more pressure, which again is that DCA year that we talked about for 2024 and building out a real position for the long term, which I think is not the worst thing in the world, to have time to build out a position and see how it plays out. So 73 got rejected, down $300 right there. It's trying to see if it can make up that spot. Did get to 73, and now it's trying to maintain those levels. Right now, 72,850. And 73, there's a ton of resistance right there. Amid missed CPI. How was it? CPI came in at 3.2. 3.2 was hotter than expected, but not the worst for CPI. Blake says Elon is great on X. He shouldn't stop freedom of speech. Yeah, I agree, Blake. But again, not every investor likes that. Like I feel like I feel like it's very rational to say, hey, I love that Elon Musk speaks his mind and he has freedom of speech. But also, there's a lot of people that are investing in Tesla that aren't a fan of him tweeting about politics all day. Those two things are congruent to be able to reconcile, right? I think Elon should say whatever the hell he wants, but I also realize that there is a lot of institutional money that is not happy with the guy saying everything that he wants, which is kind of how the world works. Like if you're a public CEO, you don't get to just say whatever you want. Now, Elon gets to say pretty much whatever because he's proven himself. And like if anyone would get the privilege to do that, it's Elon. But there are going to be some ramifications. And some of the ramifications are people are going to be like, hey, why don't you talk about SpaceX and all the amazing things at Tesla? Why are you talking about gender all day? And if you don't like it, you can sell the stock. And if you don't care, you can buy it. But the point is there's that push and pull with Elon on top of Tesla not performing. And that's the worst part. If Tesla was, delivering 15,000 vehicles or every day or whatever, then yeah, sure, no one cares. But obviously Tesla's not in the best situation. And so when Elon's also not, talking about Tesla as much and he's talking more about politics, that's where investors get upset. Okay, Bitcoin right there took a nasty fall. So you see that red candle. It went from 73 down to 71,939. So fell just about 1,000 points right there. And we'll see if that can recover, but there was definitely some sell side pressure there at 73. Matt says, I hope he says some stuff that brings Tesla down to 100. That's I think actually investors would not mind, to be honest, if Elon says some stuff that brings it down a little bit, just a little bit. MicroStrategy up 3.69%, Apple 172, Snowflake down, now is red, Google 139, Robin at 1650, and Palantir 24.99 today. Chima says Elon is bored. Yeah, I think he's a little bored as well. I agree. Even though he has, a million things that he's working on. But in the context of Tesla, I do think he is kind of bored. I mean, like until FSD becomes real, it's just like it must be monotonous work to just continuously do the stuff he's been doing for years now. But once FSD is real and it's actually happening, Waymo again is delivering more and more self-driving experiences in San Francisco. Once Tesla starts doing that and they're officially on the road and there's like actual autonomous taxis picking you up, I think that's when investor sentiment also will start to change a little bit. NVIDIA right here up 2.5%. Bitcoin right now 72,189. Whatever happened to Elon and Zuck in the octagon, my money would be on Zuck. I think my money would be on Zuck as well, but that fight is not happening, even though we thought it would happen. We thought it had a small chance. Did not end up happening. Okay. Al Fox says, as an older investor, Elon is doing the most important thing. Tesla long-term is a monster. Yeah, I agree, which is why I think a DCA year for Tesla is not a bad idea at all for those that are, long Tesla at the end of the day. Tesla right now, 174, recovering a little bit. It was at 171. Now here at 174. Oracle up 10%. Yep, they had a great earnings yesterday as well. All right, so that is it for today. Let's do the word of the day, and then we'll be out of here. We'll get back into the market close and see if Bitcoin can get back to that 73 level, 74 even. CrowdStrike right now up 2.7%, and we'll see how Tesla is. Robin at 1649, Palantir 2505. Again, if you're just joining, CPI came in at 3.2. Not a bad CPI, not an amazing CPI, but definitely not one of those CPIs that caused the market to crash, and that's what we're seeing right now. Stocks are relatively okay. S&P is actually up 0.46% on a hotter CPI than expected. Word of the day is persnickety.
Persnickety.
Okay, persnickety. Over particular or fussy. Over particular or fussy. Despite his persnickety nature, she found his attention to detail endearing. The designer's persnickety attitude ensured that every aspect of the project was perfect. Interesting. So if someone's ever being like super uptight or nitpicky, I guess you can say they're being persnickety. Persnickety. It's not the worst thing. That's a good word. Not a horrible word. Thoughts on Reddit IPO? I'm not buying it, but I do think that it will get memed up. And so maybe we buy one share just for the hell of it and just see what happens. It's like $30. Maybe we'll buy one share on IPO day. But outside of that, I don't know, dude. I think it'll be a fun IPO, but I wouldn't bet that it's going to go to the moon, because it could get easily shorted as well by sort of the Wall Street Bets community, and it could go down. So we'll see what happens. Persnickety, I got the bag. Jonathan says that's the definition of my brother. I love it. All right, everybody. That's it right now. Daily Palantir episode will be out in a couple of hours, and market close. We'll be back at 3:45, and we'll see how this market turns out. That's it. Thank you, everybody, for joining. Appreciate it. I will see you guys in a few hours. Thank you, everybody. See you later. Bye-bye.